Okay, so today, welcome to another Full Transparency Trading from Scratch. This is episode 2, and this is breaking down a candlestick. Okay, we're going to go in depth with the candlesticks. I'm not just going to leave you guys on the fact that they're order flow and leave it at that. The candlesticks originated in the 1700s Japan, and we won't go into all the history of that. And the reason that I chose black and white is because you can change your candlesticks to whatever color you want them to be. So red and green doesn't have to be your normal. It can be blue and purple. It can be whatever color you want it to be. So we just go with a clear generic black and white. The body represents the price range from the open to the close and the close to the open. And so a candle that opens from the top will be considered a downtrending candle, and a candle that opens from the bottom will be considered an uptrending candle. So we're going to go over here and flip these to color. Okay, and then we'll talk about a bullish candlestick and a bearish candlestick. Bullish is a term that you're going to hear a lot in the marketplace, and bearish is a term that you're going to hear a lot in the marketplace. At its core, bullish means going up, and bear means going down. So, in a bullish market, the body of the fact class. So, a bullish candle is going to have the body of the candle opening here, and then it's going to go up and it's going to go down, and the orders are just going to go do whatever they do inside of that candle. But the body of the candle opened at $10. Okay, at the lowest point it fell down to about $9. At its highest point it went up to about $12, and then it settled down and closed at $11. Let's say this is a 5-minute candle. So over the period of 5 minutes, you had a lot of up and down motion, and then you had it finally settling on $11. Now, with a candle is sometimes they will just go up. Sometimes it's going to go up and up and up and up and up and up and up, and then it'll stop and pull back a little bit. Other times it's going to go down and up and down and up. So lots of different things can handle. And in the bearish candlestick, it's going to start the body of the candle right there at 11 o'clock, where the $11 where the last one closed. It's going to open there. Okay, so now this one may open at $11 where this one closed. It may shoot up to $12. Then it may fall down super fast, and then it goes to $10 and then $9, and then it may stop at $9 and go back up to $10 and settle. So now it's settled at that $10 point. It opened at 11. It did all of the up and the down, and then it settled at $10. So the first one opened at $10 and closed at 11. This one opened at $11 and closed at 10. And that is the gist of it, but we'll go over to the screen here in TradingView and show you how the candles open, right? Notice how these can look very different from what you just saw when you're actually looking at a chart. We'll just select this bunch right here. All right. Then we'll shrink it down a little bit. Shrink, 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 shrink. We want it to look like this, but a little bigger. There we go. That's perfect. So notice when the order flow is going down, all the different shapes and sizes of the candles. We won't get into what all the different types of candles mean or all the different types of patterns. We'll keep it very simple in this process. So this is a downward facing candle. So the candle body opened at 53, 55, 75. Went on down, went a little bit lower to 53.45, but then came on back up to 53.46.75 and closed. This next body opened up at 53.46.75 and then fell down, 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 baby. You're street in a Range Rover, and then started to pull all the way back. And this little big red line right here is known as a wick. So the same as the picture over here. These are candle wicks up and down, candle wicks up and down. The same thing happens on the actual chart, but they come in different shapes and sizes and different consistencies. But this is just order flow. The order flow was down, went all the way down, and then the order flow started to pull back up. So there were cells inside of this. And since these are 15-minute candles, if I was to go to a smaller time frame, you would see all of the individual trades that happen within that candle. So all of these are individual 5-minute candles within that 15-minute candle. If you go to the 1-minute time frame, it's even crazier, and you see tons and tons and tons of candles and trades happening within those couple of candles. But back to the 15-minute. Okay, so now we're going to go over to the bullish candle. So those were bearish candles. Now we're going to go over to the bullish candle, and we're going to go up. So the bullish candle opened up at the body of this candle right here, the same place. They always open where the last one closed. Okay, it did pull down a little bit at a certain point in time during the trade, but then it ran up even higher, keeping it green. Went to a new high and then settled right here at 53.47.50. Okay, the next candle opened up at 53.47.50. It decided to fall a little bit, but then pushed up even higher to a new high of 53.52.75, but then settled at 53.51.50. The next candle opened up there, did a little bit of pulling back on its own, and then went a little bit higher. So notice that each time these candles decided to pull back, they went a little bit higher, pull back, go a little bit higher. The next candle pulled back a lot, and notice there's no wick on the top of this because this is a hard level of resistance where it stopped. And then it didn't form, it didn't push up or pull back at all before the next candle formed. Instead, the next candle formed, did the pushing up, and then pulled back down like it was like this one would have. Same thing, this one formed at the body, pull it down a little bit further, then push back up. It's just what turns it green. It turns green because the ending location is up. It's red because the ending location is down from the previous start of the candle. So it opens here, goes all the way up, comes all the way back down. Opens here, goes all the way up, comes all the way down. Opens here, goes all the way down, comes all the way back up. And that made it green. Open, pull it down, went up, green. Open, pull it up, went down, red. Open, went down a little bit, pull it up, green. Open, went down, went up a little bit, pulled down, red. And that pattern is going to repeat itself all day long, down and up, down and up. But you now know that I don't care if they're black and white, the upwards facing candles are bullish candles. The downwards trending candles are bearish candles. And you use these candles as signals of what could happen next. And I say could because there's no definitive 100% answer as to what's going to happen for sure. You can kind of maybe sort of get it right majority of the time, basically. But there are some trends and some things that happen consistently. So that is what you're looking for. You're looking to find an area that has the most likely outcome. Let's go ahead and reduce the size of this a little bit. So the most likely outcome is the floor and the ceiling that I taught you, that I was teaching you in the next video. So we'll talk about the floor and the ceiling in the next video. This was just a candle breakdown. If you have any questions on what a candle is and how they work, I will show you how to trade the candles later, so don't worry about that part as much. I'll show you how to use the wicks to your advantage as well and what wicks can mean for the future, so don't worry about that as much either. Massive wicks like this indicate that there is a pullback in the market and we're going to start to switch trends. So you get a massive wick pullback, equal body there, that trend. Now you can with relative certainty be like, yo, this is going up. This is not going to pull all the way back down here $20. It's going to go ahead up, and then we have switched trends completely, and this thing may go up for quite a while. But they're like arrows. You pull back, let it loose. It doesn't matter what direction it is. It's a pull back, let it loose, and it's going to go a little further than the last time. But look at how high we went. Look how high we went from this point. Usually when you see a wick like this from the top or the bottom, usually we're not coming back there anytime soon, unless you're in like a period like this, which is different. Even though you're seeing large wicks, this is more like the middle of the range. This is not external market structure. This is not the very end. But even with that, you see that we're pulling down hard for this one candle, two candles there. So that's still 30 minutes that you got to pull it down. Start pulling back this way, you still get 45 minutes that you're going up. This one, you get 30 minutes you're pulling down. Same thing, same thing. So you will have opportunities within smaller ranges of going up and going down when you see those large candle wicks. But that is it for today, guys. I'm your host, Sebastian. Listen, take the easy money. We'll get into trading and making money off of these things soon enough. You guys have a great day, and I'm out.